because my story is a bit of a sobering report coming from John Schroyer over at Green Market Report. It was running through new industry investment data that was released by Viridian Capital Advisors. And it's no surprise that over the last couple of years, due to lackluster returns, earnings, and stalled legalization efforts on a federal level, that the deep-pocketed investor cash that once flooded our nascent industry has all but dried up. And those investors, according to Schroyer, do not appear to be rushing back in yet, especially with Republicans, the hating ass Republicans, looming over might maybe win in the White House, because all these people in power are not cannabis friendly. So start off with that, let's just get into it right here. So simply put, the sector remains volatile. And with federal cannabis rescheduling still up in the air, and Republicans looming over maybe some big wins because of several factors going on right now.
Maybe looming.
It is not clear when or how these investors will be drawn back. Capital fund raising activity in the cannabis and psychedelics industries has dropped by almost 40% over the last year alone. Now, according to analysis from Viridian Capital Advisors, it's not just the number of raises either. By sheer dollar amount, fundraising is down nearly 50%. The number of capital raises in the sector plummeted to 127. That's it. 127 in the last 12 months, compared to 204 between July 2022 and July 2023. Viridian also reported that's a decrease of 37.7%. The value of those raises plummeted 48.8%. A combined dollar value of just 1.4 billion raised for the same period a year ago. It was just under 3 billion. The retailer and cultivator subsector led the fundraising for past year, representing 44 of the 127 deals inked. But that's still down 80 deals from the 12 months prior. The latest 12-month period tallied a value of $650 million for the same segment. The psychedelics arena was next in line with 16 capital raises, down from 24 the prior year, for a value of $475 million. After that came biotech and pharma subsector. Surprised there wasn't more into these labs. Maybe now that they're under the microscope themselves, there's less people trying to get in. But here's what it is. So with 16 capital raises, they were, with completed 31 raises over the past year for a value of just 184 million. In fourth place was software media cannabis sector, which is the last category to put together a double-digit number of raises with 16. And they were down from 26 prior year for a value of just 60 million brought in. So all the remaining subsectors in cannabis trade tracked by Viridian, which includes real estate, mergers and acquisitions, investments, consumption devices, infused products, agriculture, technology, hemp, miscellaneous ancillary, consulting services, and physical security, pulled in a total of 20 raises combined for just $124.5 million. The biggest decline in capital raises overall, get this, the hemp industry, hemp subsector, where only 3 capital raises were completed over the past year, down 73% from the prior year, with a 97% increase in the value of raises to $4.4 million, down from 142 million. So it's not looking too good on the money end of the industry of going forward here. I mean, there's no real way to spin it here. The way that I see it, I agree. I think it's looming over. The Democrats can't get their shit together when they were given a gimme election. They just can't get right on any level here, and they were the ones that are championing reform. And whether Republicans believe the words that they're saying or not, the fact of the matter is they have been very hostile towards the cannabis industry overall. The other thing is a lot of scrutiny on Delta 8, THCA, and like all these guys and all these states trying to suppress the hemp industry, investors aren't going to touch that shit. They do not like volatility. They like boring investments. They like predictable returns, and that's just something that the cannabis industry is not producing right now. There's a lot of stuff, a lot of question marks out there that nobody has answers for. So I don't know, man. I just want to talk about these numbers with you guys. It doesn't look like it's too much of a rosy picture in the short term here. Maybe we'll get it back, but we will wait to see. I'm Rico Lamitte, the dopest dad on the street for High at 9 News, and let's talk about it. What do y'all think, man?
I gots to jump in on this for a second. Because Schroyer, God bless him, is the one whose article earlier this week I eviscerated with glee. First of all, year-over-year change is not the metric. If you're only measuring year-over-year change, you don't understand what's happening in the space, because that's too short of a period of time to actually get an understanding of the cycles of funding and what's happening. Secondly, it doesn't indicate how much of this is debt versus equity. Thirdly, it doesn't indicate how much of this is domestic versus international. I mean, this is just not enough information for me to be information. And so that troubles me a lot. I don't know if this takes into account publicly traded companies and the amount of stock that was purchased, whether it includes all private placement deals. How does Viridian have granular understanding around that? Or is it just their portfolio? I mean, they, for many years, have been propping up their previous investments. And a lot of these investment houses have spent more time trying to raise capital for other people's money than they have actually deploying their own dollars, most of which they've already kind of overextended themselves. So I just think that this is one of those articles that
I'm actually in on the Viridian page.
Yep.
Right now, and yeah, I don't have an account with them, so I can't go into the actual like details. But it does have a section there where it says that this is all domestic here. So these are domestic numbers. These are U.S. numbers.
Yeah.
Right?
Hold on. So with that.
I would partially agree with you, Yarrow, on the year-to-year stuff, but this is showing that it's a downward trend.
From a 12-month or 24-month perspective, which is not a perspective, right? And so that's sound bites. That keeps people, reporters and people, pundits, it keeps them in business, but it doesn't really give us any understanding. The other thing is, in the beginning of this industry, there was a lot of frothy exuberance that wasn't really merited, and there was a lot of money dished out that shouldn't have been dished out.
And
there was money dished out to companies that didn't really have the fundamentals or the merit to justify onboarding the money they did. And so that was not good for our industry, because the operators who had their heads down and were grinding and just working in their business instead of putting on shiny cufflinks and showing their fancy deck and going to conferences and talking about being value aligned, they really screwed it up for the people who would have benefited from some of that money that did come into the space. So there was a natural retraction because investors and bad actors in this space got together and sort of ruined it for others in, other operators. So I just wish we had more information on this article. I wish that they had indicated debt versus equity and some of the breaking out some of the states as well as the supply chain businesses, because investment might be down in cultivation, but is it down in tissue culture labs? Investment might be down in third party software providers who are all going to provide a marketplace, and we've heard that a million times. But is it really?
I mean, you can get that on the Viridian report. So if you subscribe to that shit, you can get all those details on that. But he's given a brief overview for his article, which but I agree with you. Like, more information is good, is better, and I would also agree with you to a certain extent that the serious investors are looking for those real companies. And back in like 2017, when we saw the whole Tilray was at like 38,000% markup.
You ever
that was all hype. Number one,
put blockchain in your deck and you're getting your first funding round.
I have a serious question.
Everybody's saying like federal legalizations is coming next year. It's coming. Dude, like it's all smoke and mirrors. Go, Jason. Sorry.
No. It's all good. I have a serious question. Do you think that it's slightly possible that the average investor has just finally got the smoke cleared from their eyes in regards with these types of investments and see that there is no future in investing in any of these things until there is some actual federal policy change. And I don't mean a Schedule 3, I mean a full descheduling in regards to. And I think that all of these industries are going to suffer tremendously due to the lack of government regulation.
No, I would say two-part answer there. Number one,
two-step, huh?
I would say like a lot of the two-step. I would say the torrents two-step. How about that? I would say the first part of that, I would partially agree with you. A lot of these hype investors, a lot of the money that Yara was talking about that came in back then probably wasn't good for the industry, but those investors, that's that young, dumb money, and that's the stupid investor money that was coming in there, and it was a lot of FOMO, and those investors are still out there. They just found another shiny object to hold on to. They went from that to crypto,
or they could have lost. They could have lost their whole bag. They could have lost their whole bag. They might not even be investors anymore, Rico.
Dude, it's all about buying the dip.
Well, I just I believe in shorting them all. That's my philosophy. Short them all.
Right, but I would argue that right now in an election cycle, and there's a lot of question marks, like generally investment dollars, traditional investment dollars, they don't get dropped in an election year. Period. It's going to be a dry year.
That's a really good point. That's a really good point.
And it goes to also reinforce that a year-over-year measurement isn't a really adequate way of looking at it, because to Rico's point, investors are going to wait. They're going to see who's going to be in office. They're going to look where the political tailwinds are.
I think everybody knows who's going to be in office now.
If you're
just saying,
if it bleeds, it leads.
Just saying.
Either way, whether it's the convict or the dead guy, like.
Oh man, you guys. You guys are funny. You guys are funny.
So if we're measuring this stuff and we're only measuring it year over year, then we're not measuring. That's what I have to say.
No, I agree. I would say like a smart investment money is looking at 3 to 5 year returns minimum.
Yep.
You want to see consistency. If you're going to be putting tens of millions of dollars into anything, you want to see consistency and you want to see a steady path forward. Not need like these giant jumps or anything like that. That's how you get burned. That's how just like young money will get in.
Young money.
They'll hop in on. They'll hop in on the hype. Yeah, right. You like that? And they'll hop right out. The people who are selling you that shit will hop right out, and they'll take your money and they'll pop it into something else. So
in this area, we have an expression: if you want to make $1 million in the vineyard business, you start with $5 million. But the truth is, if you measure it over a long enough period of time, it's actually a pretty lucrative business. And so I think if I wanted to make a bunch of money, I would have a war chest and just bleed for the next 5 years and put a lot of resources into markets that I think in the long term will be exciting, like the Sunshine State of Texas, or like New York, which is the dumpster fire that keeps giving us headlines in the long term. But investors need to think about what's their holding period. If you think you're just going to ride a stock and exit quick, it's that exit quick mentality that caused investors to have some culpability in the way that irresponsible dollars were deployed in this industry anyhow.
Yeah, and then take it one step further there. A lot of the companies that were getting those big dollars back in 2017, 2018, they were given 5-year runways, right? And they didn't make those returns for those investors that they were promising, and so that money's gone, right? And so a lot of those deep-pocketed guys, a lot of the more conservative ones that took a big risk, they're not going to be taking that risk again. They're not going to get burned again and go out of business. So
that's right.
Yeah, so if you're looking for that investor cash and shit, like make sure your company's boring and repeatable processes, scalable business, and experienced team. That's what real investors look for. So I would say the positive spin on this is showing that our industry actually is maturing. And we'll just see what happens, what shakes out after the election from a federal standpoint, from a state standpoint. But right now, it's just way too many questions that anybody has answers for.
Interesting. Like I said, short them all. I'm gonna roll into my story, Rico.
Was it hodl? Hodl, is that what you say in the crypto universe? Hold.
Hold.
Don't blow out of nothing, man. If you got investments, like hold on to them. If you don't have them, don't buy them right now. Just wait and see.
I think the crypto bros are going to fail too because there's nothing to secure that money with. And all of a sudden, it's just going to be numbers on their screen.
Stablecoin, bro.
Yeah, I'll tell you about stables. You know what I keep in my stables, Rico?
A Clydesdale.
That's right. Lots of them.